Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics, and excited to have a nice panel today because we did have some news out last night after the close as Fortuna Silver has released their fourth quarter and full year earnings numbers, which we will be digging into today. And fortunately, once again, I am joined by Jorge Ganoza, the president and CEO of Fortuna Silver, as well as two analysts who are joining us for the call today to dig in and ask some questions about the news that was released. And I'm joined here by Don Durrett of goldstockdata.com. Don, nice to see you again. And also Dave Kranzler of Investment Research Dynamics. Dave, I love your big silver panda that you have behind there. So excited to have everyone who is watching at home as well. And I will now turn it over to Jorge. Obviously, you guys did have your fourth quarter and full year earnings, and perhaps you could just start by giving us a recap of what you came back with and how things went in the fourth quarter and all of last year.
Yeah, no, thank you, Chris, for the opportunity to be in the call and share the panel here with Don and Dave. A pleasure. We had a strong close to the year. In the fourth quarter, we reported record gold equivalent production of 136,000 ounces of gold. We sold gold in the fourth quarter at an average gold price of $1,990. And that led to record sales, historic record for us of quarterly sales of $265 million. On the back of that, we generated free cash flow from ongoing operations of $66 million. And, that is consistent with what we've been generating in terms of free cash flow from operations. In the third quarter, or free cash flow from operations was $70 million. And following quarter, fourth quarter, we're generating $66 million. No? So basically right in line. The business is generating strong cash flows for us. And our AISC came in at around $1,500, $1,509. So, all in all, a strong quarter in terms of production, a strong quarter in terms of what matters, which is free cash flow generation or free cash flow yield today. You look at our share price, which is in a strong correction today to the upside, but it's been hovering around 16, 18%. The free cash flow yield in Fortuna has been, hovering around that. So I think we're bouncing back on the back of these strong results today, and that's welcome to see. And we reported a non-cash impairment charge on our San Jose mine in Mexico, which led to a loss, an accounting loss in the quarter, or we took an impairment charge of non-cash impairment charge of $90 million, which drove the loss for the quarter and the year, on the back of the San Jose mine being on its last year of reserves right now. Having said that, we continue exploring aggressively with the expectation that we can continue rolling the life of mine and not see an exhaustion of reserves in year-end 2024. But those are the main highlights, I believe, of the last quarter of the year. Strong free cash flow and underpinned by strong operational performance. Good amount of ounces produced, records, and competitive cost at around $1,500, which is right close to the median or average cost of the gold mining industry today.
Yeah, and Jorge, along the lines of the cost that you mentioned there, one thing I found interesting from the press release today is that while costs were higher in 2023, you guys showed that the fourth quarter costs in 2023 were actually below the fourth quarter of 2022. And was wondering if you could elaborate on that and if that's an indication of heading in the lower direction over the next year or just how that came about.
Yes, in the fourth quarter of 2022, we had an AISC of $1,579, and for the fourth quarter of 2023, we came in at $1,510. We already provided guidance for 2024, and or guidance for this year hovers on the AISC side is around $1,480 and $1,600. It's a bit of a wide range. So right now we project to be, right in the lower end of the range. With the information we have today, I think we expect to come, at the middle or to low end of the range. Bear in mind that our AISC in 2024 is weighted, carries a heavy load because of the leach pad expansion of our Lindero mine. Let me put this into perspective. The leach pad expansion at Lindero is a $41 million project we're executing this year. That project will serve the mine for a decade. It is a sustainability project, so we, consistent with that, we report it in our AISC. No, it's not a growth project, it's a sustainability project. But it's a $41 million project that serves the mine for a decade. But we have to carry it in the AISC this year. That's how we report it. That amounts for $400 of AISC at the mine site. And of course, when we look at the consolidated AISC, it also weighs heavy on our consolidated numbers. So, this is a capital-intensive business, and every now and then we need to do a big piece of infrastructure like this one. But on more of the true cost side of things, I think we're showing competitive costs in the range of $1,000. I think our cost projections hover around $1,000 cash cost per ounce into 2024, right?
And Jorge, would it be correct to say that if all else still stays the same, that just the expiration of that charge next year, we would see a $400 reduction in the all-in sustaining cost there?
Our AISC at Lindero in the guidance is around $750, $800, $1,800. If you adjust that for this one-time big project, which again weighs around $400 in the AISC, you're talking about $1,300 per ounce, $1,400 per ounce AISC at the mine, and that is on an ongoing basis what we would expect out of that mine.
Okay, and one other question before I turn it over to Don. Obviously, the impairment charge at San Jose was something that we talked about a month ago when that came out. Although in your earnings call this morning, someone actually asked about that, and I thought that'd be helpful if you could repeat what you were sharing there in terms of the possibilities of how that could unfold, where it seems like it's not a guarantee that the mine is getting closed down. You have the exploration of the Yessi vein, and obviously exploration is exploration. You don't know exactly how it turns out, but if perhaps you could walk through just the range of different possibilities of how things could go there.
Yeah, the San Jose mine has been a pillar in our portfolio for many years. No, we brought that mine into production back in 2011, and for many years that mine ranked as one of the top 12, 13 largest primary silver producers in the world, right? Really a great asset in our portfolio. And this is an ever-depleting business, and we have had lack of success on the exploration over the last few years. And so we've been depleting the deposit. And we have come to this. And as is usually the case in this business, it is in this last year that we make a discovery, which is the Yessi vein, right? call it perhaps the beauty of the business, right? I mean, the last year of reserves, you make a discovery, right? So we are excited about the Yessi vein discovery. We have about a $5 to $6 million budget in 2024 allocated solely to drilling Yessi, and we could expand that depending on results. So Yessi, to help the audience here, Yessi has been an exciting discovery. It's a high grade with good width and near or existing underground infrastructure. So we could easily integrate it to the existing decline, ventilation, power. It doesn't require new permits. So, but we still need to get from an exciting discovery to an exciting resource that we can convert into a reserve. And there is a leap there, a hurdle we need to get over. So, it is an exciting discovery, and we're currently drilling, putting now a lot of meterage into that drilling to see if by mid-year, early in the second half of the year, if what we have here is really something we can plug in our mine plans in a meaningful way. So parallel to this, we're updating our mine closure plans, and we'll keep flexible depending on the outcomes of the exploration. At the same time, we're revisiting some resources and trying to optimize our plans to see, because we still have resources at that, but we have not been able to convert them to reserves. So we're parallel to that, we're working, optimizing our plans to see if there is a way to bring some of those resources into the mine plan and continue. No, but I think it's fair to say we'll have more clarity on all of this probably by mid-year, early in the mid-year.
Okay. And is there a particular cutoff line when you would have to have certain definition on Yessi by in terms of avoiding a mine closure? I know
there are three options in a simple way of looking at this. One is you get to a point where you say we're shutting down the mine, close down the tailings facility, and just lift all the infrastructure. No, do a closure. There is another scenario where you say place the mine on care and maintenance because we're still exploring and we need more time. So I'm not going to close tailings facilities, lift infrastructure, remove infrastructure if we still believe we have a project of merit that just requires a bit more time. So the mine will go into a care and maintenance. And then last, there is a scenario where we don't have a gap between what we're mining and what we can bring into the mine plan. So perhaps we can have a continuation, perhaps with some lower production rates and then lifting again, but we need more time. But those are the type of scenarios that I think are likely to take place, that we'll be evaluating. We need more information.
Well, that certainly makes sense, and I know we will keep an eye on that. And with that said, Don, we'll turn it over to you. And again, thanks for joining us for this call. And why don't you take it away with any questions you have?
Oh, yeah, thanks. So Jose, I was a little concerned about the news release because of what's happened at San Jose. This might be the last year of production because that mine has been a solid mine for you for so long. I remember when you had permit issues and everybody was concerned, oh my goodness, what's happened to San Jose? It's always been, kind of a focal point of your company. So that concerned me when I read the news release. And then I looked at the Lindero, I saw the high AISC, and that concerned me. And I'm going, those two red flags are like, kind of flashing in my head. What the heck's going on here? But you just went over Lindero, and that really calmed me down. So it's basically a kind of a one-off for AISC because your West African mines are doing really well. I'm definitely impressed with the cost there. They're generating free cash flow. I mean, you generated 70 million free cash flow last quarter and then 66 this quarter. Those are really strong numbers. Then your production numbers were really good. 136,000 ounces times 4 is 544. I mean, if you go for the whole year, 500 plus thousand ounces, that's a big mine. You guys are valued, under $1 billion. But your target for this year is much lower than that. I have you at 480. So are you expecting to do better than your guidance based on last quarter, or is it going to come down to 480?
Yeah. Briefly to touch on the two subjects you brought, right on, I think we have an agreement on what's happening at Lindero, with this one big project that weighs heavily on the ASIC. And with respect to San Jose, I would say that San Jose has very little impact in our NAV today. Again, it has been perhaps it's still in the general public's radar as a big store of value, as a big contributor to value in our NAV. If you look at all the analysts' reports on Fortuna, they assign either zero value or $10 million to the NAV of the San Jose mine. So the valuation of the company certainly does not reside on San Jose. I think what we can say today is that from a very low base that has been already accounted for by analysts and market participants, what we can, if we have anything today, is upside on the exploration. No, I think the value of San Jose has been largely discounted. And your question, I missed now. Can you repeat?
Yeah, the production results in Q4, 136. Are you going to be able
the production
maintain
for
a year?
We produced in the year. I'm thinking of this in annual terms. In the year, we have produced 452,000 ounces of gold equivalents. That's our production for the year. And for 2024, we're guiding a production in the range of 460 to almost 500,000 ounces, 497. So we're in, we always provide guidance in a range. And so in that range, we're still exhibiting growth. We're getting closer to the 500,000 ounces. But what's important here is that the ounces that are supporting production in 2024 are our lowest cost ounces, because the production in 2022 and in 2023 was largely coming from, for example, mines that were aging, like San Jose, with higher costs. So San Jose production is being replaced by, San Jose coming down, that production is coming down with higher costs, and we have the Séguéla production coming in with lower costs. So we're replacing ounces and growing still with lower cost ounces, and that should not be missed.
Right, but simultaneous to that, your AISC will rise a little bit this year. A lot of the big reason why is because of Lindero, but it is going to rise a little bit. You're probably going to get an AISC this year around somewhere between 1,500 and 1,600.
I think 1,500 is midfield, 1,550, 1,500, or AISC again for the year end 2023 came in at $1,500. And even with that heavy Lindero leach pad expansion project, we're guiding around $1,550, right? So I don't see on the cost side something derailing or particularly concerning. We all want lower costs, and as we get, what's weighing on our cost in 2024 is San Jose, that's still operating at a high cost, and the leach pad expansion at Lindero. Those two things are weighing in our AISC.
Right. So your free cash flow multiple right now, I only have you at 6, which is, you guys are pretty cheap. So your valuation is very low versus your free cash flow, which I like, but you're kind of on the bubble of my breakup point. I like to, right now, as far as margins go, I like to see about 1650 break even. You guys are a little above it, about 1700. So you're not quite in the safe zone, if you will. You're kind of there, but you're not in a problem.
Where is the 1700 coming from? 17.
Yeah, that's just kind of my break point for safety zone for margins.
For Fortuna, you mean?
No, for any company, any gold miner.
Yeah. But
So
again, Fortuna ASIC is projected to be,
15.
midfield is in the range of 1550.
Yeah.
You know.
So yeah, 1500 to 1550. So your break even cost, your free cash flow is going to be around 1700. So that's the number I use. I use the free cash flow number.
Yeah.
So your free cash flow, I think it's going to go down a little bit. Right now, you hit 66 million in the first quarter, but if prices stay at 2150, unless gold goes up, but if gold stays the same or goes down a little bit, it'll be hard for you to hit those numbers. I have it coming down a little bit, 45, 50 million. So but still you're cheap. I mean, your multiples like right around 6 right now. It's cheap. Your company is cheap. I just wanted to get, listeners a kind of a good feel for your cost and going forward. Now, San Jose, one thing that I think is an issue, even though analysts aren't giving you any value for it. And what I think that issue is going forward, 25, 26, 27, the next 3 years. I mean, you're basically going to lose 3 million ounces because San Jose shuts down. Right now it's producing about 3 million ounces, 3.3 silver equivalent a year, and that's going to come off. And, silver prices go up. I mean, that would have been nice. But down the road, I mean, it sounds like there's a possibility we could bring it back on at maybe 1 to 2 million ounces a year, depending on what you find. My question to you is, what is going to be the minimum amount of silver equivalent production that makes sense to take it back online?
I would like to approach the topic you're bringing from a bit of a different angle, which is what are the levers I have in the business for growth and value in the pipeline, right? Because you're focusing on San Jose for that, and certainly we have opportunities, but I have higher value opportunities in the pipeline, I believe. So, when you're looking forward, for example, and you're thinking about Séguéla, what are you modeling? We designed the mine for a certain capacity, and we already indicated the market in our news release and disclosures that at the end of 2023, in December, our average throughput capacity in December was 26% above nameplate capacity. We were running the mill and mine 20% higher capacity than design, right? And we are also telling the market that we still identify more opportunities to continue squeezing the lemon and getting more throughput out of that facility. Dave has been there, and I think he has a good sense of how that looks. And so in the short term, we have a lot of opportunity there that is not in our numbers, I believe, to produce a 26, 30, 35, 40% higher capacity with existing infrastructure. That's in the short term, though. Medium term, I envision at Séguéla a bigger mine. We are exploring, or second largest exploration budget is allocated to Séguéla with the expectation that we can have a bigger mine. And then the other big lever for value that we have and we're pulling is Diamba Sud. Diamba Sud in Senegal is an acquisition we made in 2023, and it has a most exciting project. We have 850,000 ounces of gold sitting in Diamba that we're being conservative, and we have not incorporated those ounces into our resource inventory. We're treating those ounces as an appendix, Don, until we carry a 45,000 meter drill program that's ongoing right now. We're going to enhance and improve our knowledge of the ore body, of the mineral deposit, and with that, hopefully understand it better, expand it, and by year end 2024, we aim to produce a preliminary economic assessment. Parallel to that, we're investing $3 million to advance engineering and environmental studies, so we're not behind with that in case we want to fast track this project to production. So I see a lot of opportunity in the portfolio in the Diamba Sud, and a lot of opportunity in the portfolio for the short and medium term in Séguéla. Outside of that, I already told you that there is zero value. The market analysts, the bank analysts, are assigning zero value to San Jose. So whatever else I can squeeze out of that mine with exploration success, it's just constructive for value as well, right?
All right. So expansion in Séguéla is kind of small in the near term, maybe 10,000, 20,000 ounces until you do more exploration and then expand the mill. So that's kind of a 3-year deal, 3-year down the road kind of thing, expansion. And the Diamba Sud is another kind of a 3-year kind of project, right? So we don't have anything in the near term, whereas San Jose, in theory, I mean, if you keep finding, the Yese vein, you found 17 meters at 545. I mean, that's ready to be mined. I mean, that's a very wide vein. So in theory, you could go in there within, I don't know, 18 months.
No, less than a year. 6, 8 months.
And it's in the near term, that one is kind of juicy from my perspective. That's why I brought it up.
Absolutely. And again, those are the levers we can pull. We have exploration success at a project that's already discounted, and high value opportunities at those other two. That I agree with you. Don't underestimate Séguéla doing 30% better, because 30% is close to 40,000 ounces today. If we can capture the full value of that, right? It's additional 40,000 ounces that are very low cost ounces. And that is something that we could capture in the short term as well. So don't underestimate Séguéla being able to capture higher throughputs. Potentially, it could yield, if that mine is producing 130, 140,000 ounces. That's 40,000 ounces.
Here's the crux of the whole questions, all leading up to this question here, is going forward in the next 3 years. So this year, you're going to have a good year as far as free cash flow, as long as gold price don't go down. You're going to produce somewhere around 480,000 ounces. However, next year, it's going to drop significantly. I have you somewhere dropping, around 80,000 ounces silver equivalents. You're going to go down to about, even if you expand Séguéla a little bit, you're going to go down somewhere 380,000 next year. And investors don't like it when free cash flow drops, revenue drops. And so how do you address the question?
I go back to what I told you already. Or we are already capturing, only within 6 months, 26% higher throughput at our flagship asset. If we can do 30%, which is, we're already at 26 without any major debottlenecking and without investing an additional penny on expansion, that accounts for 30 to 40,000 ounces. So yeah, thinking of 2025, 2026, 2025, you can see our production oscillating between 480,000, 420,000, 450,000. You can see our production oscillating there until we materialize, and this is an expectation, significant further growth at Séguéla and bring Diamba Sud into the development pipeline. Today, I cannot put, let me put this into perspective. When we acquired Chesser was promoting Diamba Sud as a development stage project. They were doing a preliminary economic assessment, a pre-feasibility study. So we acquired it and we said, no, these guys have done a great job, but this ore body still needs more understanding. And that's to mitigate risk and to really capture the opportunities of the deposit. So we are going back, drilling to enhance our knowledge of the ore body. We could have taken a different approach, Don, and put the carriage in front of the horses and already plug something in our lumps. We don't do it like that. No, we are more methodical than that. So we're gonna do the drilling this year. We're treating it as an exploration project in 2024, and with better knowledge of the ore body, and hopefully a bigger ore body as an outcome of our exploration, if we're successful, will deliver a preliminary economic assessment by the end of the year that you can plug in the life of mine. And that's going to help address your concern. I still need a bit of time. I'm telling you, that's a lever I'm pulling for value.
Yeah, I like what I'm hearing here. Basically, you're going to be a 500,000 ounce producer once Diamba Sud gets built, and Diamba Sud looks like a pretty solid mine. So I like what I'm hearing about that. West Africa just seems to be working more and more for you. So that's all fantastic news.
Yeah.
Go
And
ahead.
just to round up, thinking even forward, people sometimes ask me, investors ask me, how do you envision Fortuna? Right now, I don't think of Fortuna as a 1 million ounce producer. What I want strategically is 500,000 ounces, but with life of mine projections that go a decade plus. And that's a construction that you need to achieve. We construct, we build that. If you look at our latest acquisitions, we acquired this Lindero mine. Today, it has over a decade of reserves. Then we acquired Roxgold. With Roxgold comes Séguéla. Séguéla is, not at 10 years in reserves, but we clearly identify potential to take it to a decade plus. And we're pursuing that with exploration. And Diamba Sud, I'm not developing Diamba Sud yet because it's still a sub-million ounce deposit. I need to see convincingly a decade plus. I believe we can achieve it, and that's why we're putting the exploration money first, right?
Yep. One last question. I brought this up to you last time we spoke, and that was Abra Silver down in Argentina, which is near Lindero. They have a very small team. They're talking about maybe building it, but I just think it's a perfect fit for you since it's it's right there on your next door, and it's a really good project. So is Diamba Sud going to take up all your time, or if Abra Silver comes on the market, are you going to make a bid for it?
We have a bit of a luxury with our geographic reach because we have opportunities all over, and we can rank them and make them compete, right? We believe the Abra team has done an excellent job. Hats off to them, and I think they've done an excellent job. But even though we've seen a positive change in Argentina with the new government coming in late last year and the new measure they implemented, significant capital deployment to Argentina, I think we still want to see some things happening. For example, our business is capital intensive. We need to see the international lenders taking Argentina risk, right? And that's not happening yet. No, I think we're getting closer to that, but not yet. So, I'm not going to wait for everything to take place and then make a decision. But we're still need to see some things take place in Argentina for international lenders to say, you know what, I will take Argentina risk and lend to a capital project in Argentina. I think we're still a bit of a distance away from that. But we like it very much. It will be really a good fit, operational fit. There is lots of synergies. We drive in front of that project every time we go to Lindero. no? So, and I think the guys have done an excellent job. Really, really, they done a really good job. And you know, we speak with them, we meet with them, we keep updated. So the question for us here is, where can we deploy capital and get the maximum return? And it's not just the technical, economical aspect; it's also the macroeconomics in every country at any given time. No?
That was supposed to be my last question, but I got to ask one more. Seems like you're paying your debt down fairly quickly. You made a $25 million payment last quarter. You have $140 million in debt. What do you think you're going to get your debt down to by the end of the year?
Our expectation is to be our net debt zero. No, we should be net debt zero, and we paid $40 million in the $40 million in the third quarter. We paid $41 million in the fourth quarter, and in this at the end of February we paid $25 million. So the $25 million have been paid at the beginning of the year. So again, it's $40 million in Q3, $41 million in Q4, and in this first quarter of the year, we already advanced a $25 million payment. So yes, we're paying at an accelerated rate. I believe a mining company needs to be run with a fortress balance sheet, right? And we're working on that. Also funding our growth and also being opportunistic on share buybacks and means to return to shareholders in this depressed market. Right?
Beautiful. I love it, Jose. Thanks for answering my questions.
No problem.
All right. Thank you, Don. And Dave, I appreciate you waiting patiently there. And I'll turn it over to you now and any questions you have for Jorge.
Sure. I think we're kind of running short on time here, but so I'll keep it kind of quick. Just kind of circling back to Diamba Sud. By the way, congrats on the numbers. I mean, when I saw the non-cash impairments last night, I was like, oh boy, here we go again tomorrow. But I mean, the market, I don't need to offer you congrats. The market did the heavy lifting for me. You're up almost 6% today. But with Diamba Sud, and you kind of touched on it, but let's just kind of talk in the theoretical here. Let's say you get a strong PEA at the end of the year. In terms of, I mean, kind of theoretically, if that's the case, what's kind of your theoretic timeline to, you know, start building the mine and maybe, you know, start it up?
You know, a build in West Africa, in that part of the world, I think from the moment you say go is 18 months. No, you can effectively do it in 18 months. No, that's what we did at Séguéla, and you know, I think so. That's from the moment you say go. Right now, how long will it take us to say go? It is my expectation that if our exploration programs are successful, we deliver a PEA, and that PEA can quickly migrate to a pre-feas, because all of the engineering is being done to pre-feas, feas level. Right? All the engineering, I mean, on facilities, processing plant and all. A potential delay or critical path. A critical path is permitting, of course, no? And environmental permitting. You need to collect data for a year on weather patterns, on biodiversity, you know, rainfall, seasonality. You need to collect data, and you will not be able to put a robust environmental impact assessment, environmental impact study, if you don't build that data, right? So even though we are still exploring, we're already allocated, as I said, a $3 million budget to continue advancing engineering and those baseline studies. So we don't want those to be a delay of another year, because we need to see how the snails, the population moves in the property, right? So we're doing the biodiversity studies, weather patterns, all of that we're doing right now, right? And I have to say that Cesar did a lot of that work already. So we're building on that, and it's not. We have an $11 million budget allocated just for exploration, just for drilling and exploration, and on top of that, $3 million allocated to further engineering and environmental studies. No, so by the time we make a construction decision, or permitting is well advanced, and we can, the critical path has been considered, and we don't have any unseen delays, right? We would not be shy because we have the cash and the liquidity to take some risk, for example, and place early purchase orders. That's something we did at Séguéla and worked very well for us. In Séguéla, before we made the construction decision, we advanced $11 million to secure critical equipment packages. Because what happens is when you do the study, a feasibility study, you call Metso and FL Smith and everybody, and all the equipment suppliers, and say, quote this for me and give me a potential delivery time. And they give you a quote and a delivery time. But that it fits into a study. And then when you go with that same quote and delivery time to place the order, they'll tell you, okay, now it's 6 months longer and 30% costlier. So what you do is when you inform and feed your studies, if you can place the order, right? And you secure that. So that's what we did with critical equipment packages when we built Séguéla. We advanced $11 million for engineering and purchases. That's why our budget was right on target at Séguéla. It's not because we are magicians. No, we planned and mitigated risk, placing early orders, securing prices and securing delivery times, right? So what we feed into our Gantt charts for delivery has already a firm commitment, with penalties and agreements. It's not just a suggestion from a supplier, which is sometimes what informs your Gantt charts.
So would you be looking? Let's just say everything goes smoothly, no snags with the permitting. Would you think you'd be able to start up a mine early 2027?
I have to be careful with what I say.
Understood. I'm just talking in the theoretical here.
In the theoretical world, as I said, I think it is reasonable to estimate probably an 18-month construction period. And it will be reasonable to estimate that if everything goes well, we could perhaps be in a position to make a construction decision next year, 2025, if everything goes well accordingly. The lawyer is probably going to pull my ears when I speak with you.
Well, I mean, if you can replicate what you did at Séguéla, I mean, you're going to come in under expectations. So, that's what I would estimate anyway, just based on the way Séguéla went. The second thing that I wanted to ask about, because no one touched on it on the earnings call earlier today, and everyone seems to be ignoring Yaramoko, but you managed to keep extending the mine life, and I'm just wondering, do you have any visibility on how much remaining mine life there is at this point, and what's happening with the exploration results there?
Yes. When we acquired Roxgold in 2021, Yaramoko was set for closure in 2023. And what we had in 2023 was a superb year where we decided to increase guidance, and then we landed production at year end on the upper end of that increased guidance for the year, right? So we have enjoyed significant exploration success. Now, where is that success coming from? We haven't had a drill hole hit or anything that we can make a splash about. In the deep zone of the main ore body, zone 55, remember that this is a high-grade deposit. Statistically, you would define it as a high nugget. That's how we call it, a high nugget deposit. And I'll give you a factual example. This is a true example of what we face here. In the deep portions of the deposit, on the fringes, when we drill, we can hit 1.5 meters with 0.5 kilo of gold.
Wow.
0.5 kilo of gold per ton. It's a drill hole. Then when we drill around it, we encounter 1 gram, 2 grams. So when we try to build a resource around it, it doesn't work. Statistically, we cannot, right? So what we do is extend, like the old timers did with this type of deposits. You extend the tunnel, extend the drift, get to the zone, open it up, and then sample it. And what we find is that we don't have 0.5 kilo of gold, but we don't have 1 gram either. We have 6, 7, 8. And those are the type of gains that the team at the Yaramoko mine has been achieving by extending on the fringes of the deposit or tunnels or underground workings. So it's been slow gains. Every quarter we've been gaining 10,000 ounces, 20,000 ounces, quarter after quarter. So it's nothing, if I write a news release saying we gained 20,000 ounces at Yaramoko, everybody's gonna go like this to me. What are you talking about? But if we do that quarter after quarter, quietly, quarter after quarter, at the end of the day, we have another good year of production. And that's what's happening at Yaramoko. And that's why today, when the mine was, instead of having a mine closing in 2023, we have a mine that today has a strong 2024, a strong 2025, and set for closure in 2026. But we continue expanding those zones in the deeper portions. It's difficult to drill those deep zones because we're almost 1 kilometer below surface, right? So drilling from surface is inefficient, and there are limitations to the speed at which you can drill and the density you would need to drill to convert those high nugget, high variability areas. And there are sometimes there are gains and sometimes there are losses as well, right? You get to some of these areas, it's not a guarantee that you'll be able to capture that. But we've been, lucky, successful, smart, perhaps, and been able to capture a lot of it.
Are you looking for new zones that you can drill test?
Yes, we have a new area. We will be publishing an exploration update in the coming week. It's going to focus on for African exploration, and subsequent, before the month is over, we should be putting out a release on our Latin American, basically the Yessi vein drilling, right? So you should expect 2 news releases in the coming weeks, updating everybody on our exploration results.
Okay, good. That took care of another question I had. Then really quickly, I noticed that there was a 5 million and change write-down of greenfield exploration projects in Mexico and Argentina. What's your pipeline look like in terms of additional greenfield projects that you're exploring in those countries?
We had been drill testing in Mexico a prospect called Baborigame in northern Mexico. We decided to drop it. We had mixed results, some encouraging, some not so encouraging. But at the end of the day, we said, does this look like the type of deposit, if we get, and we just, even though it's a bit of a teaser, right? It gives you good results and not so good. So we decided to drop it. And in Argentina, we were close to the Chilean border, up at high altitude, over 5,000 meters. That's elephant country for gold and copper deposits. We were drill testing, exploring. We didn't get to drill an anomalous area. But again, we thought that the hurdle for success way up there in that part of the world would be just too big. And so we decided to move on. We are looking at another project in Mexico, close to the U.S. border in Mexico. We're looking at that now. And we acquired a large land package through an option agreement and JV with Turaco in the Ivory Coast. It's about 150,000 hectares of exploration ground in an exciting geologic belt in the north part of the Ivory Coast. We are acquainted with that area. We like the geology very much. It's early stage, but we have a sizable land package, 150,000 hectares, so lots of room to play in the right rocks, in the right structures. So I would point to that in the Ivory Coast and this other prospect in Mexico we're working on. Turaco is the name of the company that is the underlying owner of the property in the Ivory Coast. They already put out a news release with a nice map showing the location of everything. We decided not to put out a press release on that because it's early stage exploration for us. So we would like to, hopefully come up with something and then start talking about it, right?
One more quick thing, because that jogs my memory. What's the political situation look like in Burkina Faso? And the reason I'm asking is you've also got the Basura project, and if it gets to the point where you feel confident or comfortable advancing that, that's certainly something that you could use the ore to feed Yaramoko.
Yes, unfortunately, I have to say that the situation in Burkina Faso is not getting any better. No, the security and political situation is not showing improvement. So we're happy to keep our investment. We're happy to keep investing within the fence because in spite of this that I just said, when we approach the government is quite supportive of responsible mining. They want foreign miners in the country. But at the same time, there is a humanitarian crisis in the country. At the same time, there is a major security concern in the country. And the politically very unstable. Since we made the acquisition, this is the third government, in 2-3 years, this is the third government. And what we have today is a young captain, Ibrahim Traore, as a strong man. But he came to power through a coup, right? And again, when we approach him as a mining industry, not just Fortuna, but as an industry, they are quite receptive and want to work together with us. But having said that, the environment is very difficult to operate there, very difficult. So we're not looking to expand our presence in Burkina Faso today. We're happy to keep our investment and continue harvesting, but not seed more in Burkina Faso today.
Of course, I'll just point out down the road, if the political situation changes, that's probably, some pretty quick upside potential for Yaramoko.
Yes. We strategically, long term, we love Burkina Faso. The mineral endowment of Burkina Faso. And in spite of all of these social, political, security issues, the receptiveness to investment in mining is tremendous. A country with such big challenges and struggles, wants to work with responsible mining. No, they're very receptive and welcoming. But security, humanitarian crisis, all of those things weigh heavily. No? So we're happy to continue working with the government at our Yaramoko mine today. And hopefully we see a change for the positive, and we see the country back again as a favorite investment destination, which it was. I first went to West Africa in 2015, and Burkina Faso was the premier jurisdiction back then, ahead of the Ivory Coast and other places. Everybody wanted to be in Burkina Faso.
That's great. Thanks, Jorge.
Well, thank
Yeah.
you, Dave. And Don, anything else pop up that you wanted to run by before we wrap up for today?
Since you give me a chance, I'm going to go ahead and ask.
Sure, please.
The 45,000-meter drill program at Diamba, that sounds like a lot of holes. Are you going to drill them all this year, and how many holes?
It is a program for this year. It is a program for this year, and I can advance to you that we're drilling them very quickly. And I think that program we have 3-4 drill rigs working with good production, good meterage, and I expect we can be done with that by mid-year.
That's over 200 holes, right?
Sorry?
Over 200 holes.
Yes. Yes.
So it's a lot of drilling. That sounds good. Thanks.
No problem.
All right. Well, thank you, Don. And Jorge, anything else that you'd like to touch on that we haven't covered today? Or I know we got.
No, I think thank you guys for the opportunity. It's been so important for us to communicate where the company is, and through your questions and everything. I hope we given your audience a good taste of where we are, the challenges and opportunities that Fortuna faces, right?
Well, I think so. And again, congratulations on a positive day and a good quarter. And I will just wrap up by saying that obviously you can find out more at fortunasilver.com. And there is the contact tab up there where you can submit questions if anyone would like to find out any more particular details about the company.